Good morning, Bitcoiners. Happy Easter Monday, and welcome back to another edition of your Bitcoin economic calendar, the news you need to know for the week ahead in Bitcoin. Today, we have a pretty jam-packed episode. First off, we're going to be covering some very important news that we saw last week that could have some long-term implications for Bitcoin. In addition, we're going to be looking at Bitcoin's buy-sell volume indicator, which was flashing some interesting signs last week. We're also going to be looking at the VIX, which is the index that tracks the volatility of the S&P 500 contracts, which has closed the gap that it had opened up in February 2020. We're going to talk about potential implications of that too. And lastly, we're going to be talking about the CME, which is poised to launch micro Bitcoin futures in May. So this could have potential implications. We're going to be covering those again today. Grab your coffees. It's going to be a good one. So starting as we usually do with Bitcoin, we have the weekly chart here. And we see that after flirting with a breakout on Friday, Bitcoin closed Sunday at $58,212, up 4.34% for the week. Now, while it seems like the price has been quite volatile as of late, if we zoom out to the daily chart and we draw a line basically from where it is now, we see that basically it's in the exact same spot Bitcoin is for the exact same price where it was 43 days ago. So this is just interesting to highlight. Now, the news flow in the background has been positive, very positive. Last week, Coinbase announced that it got the green light to start trading on the NASDAQ as of April 14th. And additionally, as you can see here, essentially PayPal announced that it will allow clients to start paying with Bitcoin and other cryptocurrencies last week. In addition to that, the CME announced that it would be launching, here, this is probably a better graph, here we go. The CME, Chicago Mercantile Exchange, announced that it will be launching Bitcoin micro futures. This is very important because until now, the contract size for the CME Bitcoin futures was 5 Bitcoin, that's close to around $300,000 per contract. That makes them very expensive and hard to trade. The new contracts will be 1/10 of the size, so equivalent to half a Bitcoin, making them much more accessible at around $30,000 per contract. For context, the chart that you have on your screen right now is the traded volume and open interest for Bitcoin futures over the last 12 months. And as you can see, this has grown by approximately 10x, which is very meaningful, especially considering the fact that the CME is, if you can look at here, you know, the volume of the CME has just exploded, and that's, you know, despite having very quirky contract sizes. But now with these micro futures, we can probably see more of this volume pick up. So interesting to keep a note on that. Then, in addition to that, we had the news that Tether, the world's largest stablecoin by market capitalization, announced that it had completed its first attestation, which found that they had $35.2 billion in assets backing 35.25 billion in assets backing 35.15 billion in Tether. This is the link that you see in the screen behind you, and the article made waves last week. So again, Tether is a very important name in the space, and there's just been a lot of news flowing around this name, particularly out of the New York State Attorney, which cleared and settled with Tether, I guess, a few weeks ago, and now they're taking clearly steps to kind of clean up their image. Now, you know, just to speak a little bit about the news and what we're seeing, in previous market cycles, these headlines would have taken the spotlight. You know, they're very big names, very meaningful implications for the markets with these announcements. However, these announcements are currently competing for attention with mainstream names like Chipotle, Paris Hilton, and even the Teletubbies, who were all tweeting about Bitcoin last week. The fact that celebrity endorsements aren't generating the same buzz as before could be a symptom of just how much Bitcoin has penetrated the mainstream narrative in mainstream media already. On the Bitcoin options front, just to pop that up for a second, we see a large block of options right here in the $80,000 call strike, which is interesting. Again, you know, relative to what other open interest sizes there are, this one clearly seems to be the bigger one on the call side. On the put contract side, we see two blocks of contracts, one rather large one at the $50,000 strike, and another one, rather large one, at 4,000 contracts in the $40,000 strike. So again, something to keep in mind. And looking at the perpetual swap funding rates, we see that across major exchanges, perpetual swap funding rates are actually below their 30-day average, which is typically a healthy sign going into the trading week. Moving on to the S&P 500 index, we see that the S&P soared to a new all-time high last week of 4,038 points, up 1.61%, leading major indexes higher for the week. We see that the NASDAQ was also up to a brand new all-time high of its own, up 0.09%, and the Dow Jones was also to climb to a new all-time high of its own, up 24 base points. So as we see, the big leader in the index world was the S&P 500, up 1.61%. Elsewhere in the markets, we saw that the yield on the 10-year note essentially did a new, just going to open it up on the daily, but it did actually touch a new intra-week high, and this was, I believe, on Wednesday, but it settled the week back at 1.68%. Let me just put it back on the weekly. Yeah, it settled last week at at 1.68%, up 1.14%. So that the fact that it's consolidating around this range has given equity markets a bit of a breather, just because it's not ripping higher at the moment. So that's been positive for the markets. And then if we look at the dollar index, last week was a pretty flat week for the dollar, essentially not moving much. Essentially not moving much, gaining 30 base points only. To talk about a few interesting signals in the market. So fund manager Tom Lee, let me just pop the right one here. Yeah, so fund manager Tom Lee from Fundstrat highlighted during an interview with CNBC that the indicators that they follow, namely the Russell 2000 index, is close to breaking out from very key levels. Now, to speak a bit about what the Russell 2000 index is, it's an index that tracks small capitalization stocks, with the average valuation of stocks in the index being $3.8 billion. This is much smaller capitalization than the ones that we track on the S&P 500, Dow Jones type of indices. Now, the fact that this index is doing really well, and I just wanted to pop it up here, the ticker is RUT, just shows how broad the rally really is, and the fact that it's well beyond trendy stocks and commodities / industrials. So in this index, Mr. Lee is looking for a level of 2293, which is currently trading this morning at 2280. So basically really close to that level that Mr. Lee is watching. We drew this little blue line here that you can see in your screen to basically illustrate what level Mr. Lee is talking about. And in his view, with this index breaking out of this key level, it could cause a continuation of what he calls a face ripper rally and a substantial drop in the VIX. The VIX is the index that tracks the implied volatility on the S&P 500 options contracts. If we look at that index for a second, that's done some really interesting actions. So see this here, basically in the week of February 24th, when this whole Corona thing started, it gapped higher. So what a gap means is where there's physical space between the close of one bar and the opening of another one. In technical terms, gaps tend to be closed, meaning the price will revert to that original space where it took off from. We saw that last week, the VIX actually closed the gap that it opened up in February. Now, this is very meaningful because it could very well mean that once it reaches this point, it can reset and essentially head in either direction. In Mr. Lee's view, there's a pretty good chance that the VIX continues dropping, which in essence gets when the VIX drops, it tends to be because the market is rising. So again, important to keep a level or keep our eyes on these very interesting levels. We can see that the VIX is very quick to react when the market feels like something's off. So interesting to keep this in mind as we head into the week. Moving over to gold, we see that after flirting with a new low intra-week, gold came back roaring to close the week barely higher at $1,734 per ounce, up 23 base points. Just want to show you on the daily how basically it roared back on the last trading days of the week, just so that it settled barely higher. And looking back at the weekly chart, we see that it had, it went all the way down to a new intra-week low, but then again recovered to basically close the week a little bit higher. Now, there was a really fascinating chart published by Frank Chaparro from The Block this week, comparing the institutional inflows to gold Bitcoin funds versus Bitcoin funds. Comparing the flow of funds between gold funds and Bitcoin funds. So on the chart that I'm about to show you, gold is on the right y-axis. And as you can see here, all Bitcoin funds basically right around April, early January, actually probably before, this trend probably happened in around October 2020, we see that gold essentially plateaus and it starts heading lower, whereas Bitcoin basically just accelerates upwards. So interesting theme. We've been writing about this theme at length here. And we'll continue to monitor this relationship as it evolves. There's also another interesting article out of Joe Weisenthal from Bloomberg this morning comparing gold to Bitcoin and essentially talking about the end of the gold bugs, which is I found very, very interesting title. So definitely recommend you guys go check that out. Now, why is this so important? Why are we hung up on this? It's important because gold is a $9 trillion market. And Bitcoin just crossed the $1.07 trillion mark. The long-term implications of these trends cannot be understated. Any 12% rebalancing from gold to Bitcoin would double Bitcoin's current market capitalization. So again, just important to keep important to pay attention to the difference in scale between these two markets and what it can do to Bitcoin. Moving over to the FTX DeFi index, we saw that we had a really strong week for the FTX DeFi index last week, actually closing its highest weekly close ever, up 22.5%. Ethereum also had a really good week, breaking above $2,000 and reaching a highest weekly close, essentially its new highest weekly close ever, up 23% at $2,075, closing above that very important $2,000 mark for Ethereum. Now, we have covered here, just to bring back the graph to the DeFi chart, we've covered here that the proposed law out of the US to regulate digital asset transactions would likely affect DeFi the most. However, price action seems to show that investors are not too concerned about this right now. We will continue to monitor any developments on this front very closely. Another interesting update from the DeFi world in the DeFi space this week came from Toby Lutke. He's the CEO of Shopify, and he tweeted that he was basically getting excited about DeFi and asking his followers what role they wanted Shopify to play in these commerce-related opportunities around DeFi. Now, this, alongside the plans from Visa that were recently announced to accept USDC payments, continues the trend of companies looking at opportunities in DeFi. Compatible stablecoin payments on the world's largest credit card network and compatible payments on the world's largest online retail platform, or one of the largest retail platforms in the world, would certainly be game changers for this space. So interesting to keep an eye on updates on this space. We'll continue to monitor any kind of relevant news and updates right here through the economic calendar and through our social media accounts. Moving over to our Bitcoin mining difficulty commentary, we saw some big moves in the difficulty front since we last checked in. Last Thursday's difficulty adjustment brought us to a new all-time high of difficulty at 23.14 terahashes, up 5.82% since the last epoch. Since then, hash rate has continued pouring into the network, with the next adjustment currently showing another 5% increase in difficulty, and it should tentatively be coming 10 days from now. Now, switching gears to the mempool for a second, the size of the mempool continues to trend lower, so this is great to see, but we're still at rather elevated levels. So transaction times and fees will probably stay around the same levels or similar levels that they have been over the last 2 weeks. So as always, we leave you with what's ahead for the week. On the macro side, the minutes from the latest FOMC meeting will be released this Wednesday afternoon. Now, during the last meeting, some of the Fed's economic forecasts were revised sharply higher to reflect improving economic conditions in the US. The minutes will provide insights into the thinking of the members of the committee. As a note, during the last meeting, the US GDP forecast was revised to grow up by 6.5% versus the 4.2% estimate that was anticipated in December. Further, the Fed expects unemployment to drop to 4.5% by the end of 2021 and unemployment returning to pre-pandemic levels of 3.5% by 2023. The Fed also said that it expects to see near-term interest rates near 0% throughout until 2023. Interestingly, Jerome Powell, chairman of the Fed, will also be speaking at an IMF panel on the state of the global economy this coming Thursday. Now, switching gears back to Bitcoin for a second, I just wanted to show you guys a graph here. But earlier this week, in a tweet, Nick Corey, a cryptocurrency trader, highlighted an interesting signal in an indicator called the buy-sell volume imbalance for Bitcoin. Now, the buy-sell volume imbalances indicator tracks the volume of buy and sell transactions per bar, whether it's hourly, weekly, or daily, and the number of sells is subtracted from the number of buys. The difference is plotted in the indicator panel beneath each bar. Below or behind your screen is a recent snapshot for Bitcoin. The blue bar signifies more buys than sells. So you can see the blue bar on the far right side of the graph. And the red lines signifies more sells than buys. Now, as you can see, the last time there was a bar this big on the sell side was before the drop from 8K to 3K to around 3K in November 2018. The recent blue spike shows a disproportionate amount of buy orders relative to sell orders, and this shows that there is a disproportionate demand to buy Bitcoin on exchanges based on this indicator. Now, and another very interesting graph that we saw this week, Glassnode, a prominent on-chain analytics firm, released a graph highlighting that large holders of Bitcoin typically sell into the earlier stages of each Bitcoin rally. On-chain data suggests that they, and by they we mean addresses that have been last active over 1 year ago, have started selling Bitcoin once it crossed the $20,000 level, and they have continued selling into the current levels. Switching back to not the graph, the main unknown for Bitcoin remains this proposed regulation out of the United States to regulate digital asset transactions. Now, the commentary period for this regulation or proposed new regulation ended last week, as we mentioned, and updates could surface at any time. This would likely significantly impact markets. So, as we've said, it's a big week coming up, and as always, we'll keep you posted on any relevant news and information right here through the Bitcoin Economic Calendar and through our social media accounts. Now, if you liked your show today, if you learned something, and if you're so inclined, we welcome you to like it, share it, and subscribe to our channel. If you don't yet have a Ledn account, you should check out Ledn.io and learn how you can start earning 6.1% APY on your first 2 Bitcoin and 12.5% APY on your USDC. Thanks again, everybody. Have a wonderful Easter Monday, and see you next week.